MPS has actually a number of very valuable advantages. As let's say in Egypt, you've got more than 95% of the transactions are domestic. That you have, number one, you concentrate on the untapped segments, and you segment the market and the community between employees, pensioners, women, millennials, all that stuff. You are able then to create domestic needed products and solutions, appropriate use cases that fit to the culture and the awareness that is available here also. MPS also gives you the flexibility of collaboration with the different stakeholders. It gives you that, and it allows you that. It works on the economy of scale, okay? And this also thus has a very positive impact on the pricing at the end of the day for the different merchants.
And Tariq, from a financial inclusion point of view, I suppose it provides a cost-effective solution to banks and fintech companies to take electronic payments to people who previously only used cash or only could use cash because where they were living or how they were working in small businesses or not without any bank accounts. So how do you see in the next 5 years the scheme in Egypt impacting financial inclusion in the country?
How does what, sorry?
How do you see the Egyptian scheme impacting financial inclusion in the country in the next 5-10 years?
I think it's going to impact positively, and the reasons that I'm positively thinking like that is that, as I said, we are building on products based on use cases. We are working on the economy of scale, so the pricing at the end would be purpose fit. We are using technology, the utmost technology available now that is appealing to the millennials and the different segments that are available. We are working also, we have the support of the government, of the National Payment Council, and definitely of the central bank that allows us also and supports us to work on the largest corporate merchant that you could find, which is the government. So all the payments and collection available there would be through the National Payment Scheme. Now this allows that you could outreach to even non-banked and untapped segments to be over.
Okay, that's great. You really need assistance from either the government or some authority to give it a leg up when it is in the starting phase. And I suppose the key financial inclusion target is a major element in the minds of the government planners. So I wanted to go to Arif, talking about financial inclusion. Now you've already ahead on the curve in India because you're the Chief Digital Officer of India's National Payment Company, which also owns Rupa, India's national payment scheme. To what extent Rupa has changed people's lives or has improved this financial inclusion objective that India has had for a long time?
Sure. Thanks, Ami. Just to quickly introduce myself once again, I suffer from an identity crisis. Wherever I attend an event and people give me importance and come and meet me because they assume I'm a regulator, but actually I'm not a regulator. I'm a payments company based out of India. Okay. So Rupa, so we have roughly around 600 plus million cards that have been issued in the country. So I think by far it's one of the largest debit card issues that has taken place. What actually really triggered and was a catalyst
is it mainly Arif debit cards that you are issuing in the NPS?
We have recently launched credit cards also, but that's in the beta version.
Okay.
Debit card has been the largest one for us. It's 600 million plus, as I said. So there were 2-3 things, right? So essentially, before we came into the scene, there were a couple of other large multinationals that were issuing cards already in the country, but their reach was limited to around 40 to 45 banks. So essentially what it means is only 45 banks, largely very urban in nature, were issuing cards. The very fact that someone like us steps in, with well aided by the government acting as a catalyst, we were able to expand that reach to more than 1,100 banks. So what it means is the banks which are at a district level or a village level. India is a large geography, right? We have more than 25 actually national languages and so on and so forth. So clearly there was a need for someone to come and create a product which suits the needs of the geographies in a very specific way. And that's where Rupa has really helped us. What's also happened is, with Rupa being a very specific domestic scheme, it has helped us to solve for some very specific issues. For essentially, till a few years back, agriculture contributed to the maximum of our GDP. So Rupa has actually helped us. For example, we have certain things as fruit granaries and markets where farmers locally produce, say, wheat or rice. They go and deposit it over there. So if someone picks up from there, the middleman picks it up, gives it to the government fixes a maximum, minimum retail price, and that's how the money moves. And then there are government-backed go-downs where where these things are stored and so on and so forth. Fairly complex supply chain, buyer, seller market, and all. What we did is Rupa, we actually catered to the need. So what happens is every large farmer, to start off with, actually gets a Rupa card. So what happens is when he goes to these markets, what we call mandi in India, when he goes over there, the actual transaction is happening on the card. So A, there's a digital record. B, typically the farmer is usually the people who are below poverty line or people who are not very literate. The money coming into his bank account usually used to take around 7 to 15 days. And there was a huge challenge for him because there was nowhere for him in that gray market to really, and there were a lot of middlemen cutting in between. What Rupa has enabled us to do is to make sure the money goes into his account and he has access to it immediately. So the money moves 24 hours, within 24 hours. So that's been one of the key things, one of the things that we've always aimed at NPCI as to how could we take Rupa and reach out to the interiors of India. Having said that, we are a pretty dominant figure even in the urban center. So today we are the second largest in volumes in the country. Mm-hmm. So that's been our story.
Okay, no, that's great. And you mentioned that it's bringing people from the gray economy into the formal sector. But you could flip the argument also to say that some people will never move into electronic payments because they are part of the gray economy. So maybe I can just move to Vladimir. In terms of the gray economy, in terms of the informal sector, how do you think electronic payment schemes, particularly like national payment schemes, can help people or businesses and companies bring informal or gray economy into the formal sector or into the the legal sector?
Thank you, Sami. I think there is no just one answer for this question. We're doing this because there are a lot of different point of views on that. Very important issue, very important question: how to make a gray economy become whiter and become more clever. In my opinion, what is really important is to create advantage for people to use their money legally and pay taxes. It comes through many different possibilities which we as a national payment system work on. Certainly it's about products, it's about pricing, it's about different types of motivation to use specifically cards or account-to-account payments, which does mean that the money goes illegally and transparently between the accounts and from one person to another. What we see at the moment, for example, is that the tremendous growth in our country is in P2P payments done from account to account, like within biggest banks. What we understand, it's not just P2P transactions. It's P2P which replaced normal P2B sector. And a lot of P2P traffic, a lot of P2P transactions, they're made not because people don't like paying taxes. It's to a very big extent because this application to application, actually, account to account payment is very convenient for people and for small businesses. SMEs, they don't have enough money sometimes to install a terminal or pay a rental for that, but they can easily print out a QR code or give you your telephone number and you can easily and instantly transfer money to their account and money is there.
So people are using that in Russia to actually make payments for small businesses are actually using that.
Absolutely, absolutely. And we see that there are trillions and trillions of rubles coming to this P2P sector. Although card payments, like C2B payments, are growing, P2P is growing even faster than that. And we understand that about 60-70% of P2P payments is not just transferring money between people, it's paying for services and businesses. So what we're working on at the moment is making a very similar and easy to use technologies to make these payments accessible to businesses as P2B, C2B payment, through QR codes, through faster payment systems. And in our understanding, it will foster a very big growth in really transparent, clear payments between people and businesses, thus making it really moving this from gray economy to white economy. And you know, it's just one example of how we can motivate people, just trying to understand their needs. It's not, again, it's not always about not paying taxes and just being in gray economy. It's about convenience and usability of how and what they can do.
A lot of people don't have anything to hide. They'll happily pay taxes as long as they find value in actually going through a electronic payment system, right?
Absolutely. That's exactly my point. If to pay clear and white method of payment, if to use this is more profitable, is more advantageous to you as a person, you will be doing this.
And those are the sectors who have not really been, you know, they've been the focus for banks because they're smaller merchants, they are informal sector, you know, so underserved.
That's true. Sometimes economy is not there if we are trying to use the old style payment methods like card payment with a big terminal that is costly, with a telecom or internet that is needed as a line. So there are lots and lots of barriers on the way to make payments white and transparent. So just we need to think every moment over and over, have we removed all these barriers first of all to make these payments happen easily and very conveniently for the people and for the small businesses. I think then it will solve at least half of this problem. Second half certainly will still be there about taxation, about and this is also some other scenarios and some other methods that can be used. Sometimes it's not always about it's about availability of proper infrastructure in certain regions, faraway regions of the country.
People who want to avoid taxes are going to do that anyway, right?
Absolutely.
They're going to find a way to do that.
Certainly here we need to have some sort of legislative methods. So different stories. There is no, it's not like one size fits all. But we need to understand that for every particular problem, we need just to segment them. Why people don't pay in this segment, why people don't pay in this segment. And for each of such segments, I think the national payment systems will be finding proper solution fitting their particular country, culture, and economy.
But it's those underserved statements, and Ziad, Elisa, Ziad, you are part of Saudi Arabia's Saudi Payments Organization, which has its own scheme called MADA, which has been very successful. And one of the areas I understand what Saudi Arabia has done well using MADA is to go and identify those underserved segments, underserved merchant sectors, so they get a means of accepting payments that are not cash-based.
True, and I do agree with what been mentioned here in the panel. Vladimir pointed out one very important point where there is no solution fit for all issues or scenarios. What we've done in Saudi Arabia that we've identified some of the issues regarding the cost, the barrier that is preventing the small merchant, and we created a framework and we've certified some merchant service providers where they will take care of all the maintenance after the sales from the bank, and they will provide it from A to Z, all the service, the maintenance, and they will waive all the front-end costs, they will waive all the upfront fees, they will waive all the payment before the system is working, and only take small amount from the transaction. So this prevented one of the barrier, which is the cost. Also, we've noticed that there are some of banks would like to provide some financing services to some of the small and medium merchants. So what we've did, we've developed a new feature where the bank, under the agreement with a small merchant, will be able to block the service only for that bank, where he can see all the point of sale cost flow coming to the bank, and based on that, with other risk measures, he can give him some small financing. So this also helps diversify.
Perfect, thank you. Now, just shifting gears to another key topic, how to get national payment schemes to critical mass, how to set them up and then take them to critical mass. To what extent do they need a regulatory push? To what extent they need a push from a centralized authority? I mean, there are different views on that. Some people would say, let the market be free. Let people do what they want to do, and market will go the way customers demand it to go. I personally feel in Europe that has not been the right, generally it has not been the right way, because we have seen what happened in 2009 with a free market, and where did the banks go? On the other hand, if you give regulators too much control, it's not necessarily they fully understand the market dynamics, at least not in Europe. In Europe, the regulators have done a lot of stuff which was not necessarily the right thing to do. They did it because they wanted to eliminate, they wanted to create more competition, but at the same time, they changed some structures which are having an adverse impact. So Tariq, just coming to you, how do you see the force of regulation in setting a national payment scheme and pushing it forward? How do you see that as a force for taking it to critical mass in the future?
Okay, if you'll allow me, I'll not just answer in regards to the MPS. I'll talk about the payments ecosystem in total. I think it's very vital, the regulatory body and the regulations that are being issued, and having an appropriate, effective, regulated market is so vital. Not over-regulated or deregulated, I mean appropriately. So you've got timely, prioritized, appropriate regulations issued at the appropriate time, buy-in from the different stakeholders, that gives actually trust of the market, the whole ecosystem, about the regulator who is responsible. And this allows for new investments, for startups. It does give a very healthy environment. Also, it does allow for collaboration, which is very important. I mean, some regulations do allow collaboration, which is very important. So the different pillars in the value chain would collaborate together, giving a more effective and efficient solutions and at the right cost. And in the meantime, also, if there is any kind of competition, so it's guided competition, not a fearless one, but a guided competition there. Definitely, all those have to be within the core principle, respecting the core principle,
It's
factors.
a fine line.
Yes, it's safety, security, reliability,
it's
efficiency.
It's an art rather
exactly.
than a science.
I just want to say the last thing, please, if you allow me. I mean, talking about here, definitely our regulatory body is the central bank. Now, the thing is, you don't have to look just beneath your leg or your foot, as they say, because there is a lot of intersection between the payment ecosystem and other institutes, governmental and non-governmental. And this is why we have seen that the central bank has moved forward and has pushed for a national payment council, where all the different institutes and governmental, non-governmental are there, where there is an intersection between the payment world and the ecosystem and some of those institutes, to have the buy-in, to have the all that stuff for any. Also, even with the laws. I mean, the central bank now is moving with a couple of laws, and one of them is the law of banks that should be very soon going to the parliament, and has actually, just give you an example, have very focused chapters on payment. This is for the first time to be done there. So definitely a regulator that has on his agenda the payments and the technology and the innovation that's going on his top agenda and moving, not just internally inside the central bank and in the financial sector, and also with the other institutes that cross-board or intersect with them. This is very vital for the, yeah.
So the regulator also has to look after the interests of fintech companies, not just the banks. And that's very important, to open it up to everyone who wants to play in that.
And this is what we have seen today in the announcements, I mean, the 1 billion fund that was done last year. We also seen today the sandbox. We've seen also the fintech hub. I mean, there's all those initiatives from the central bank or the regulator is very, very important,
Right.
and does move the... Okay, thank you.
Vladimir, quick question for you. In Russia, how is the fintech regulation working out in terms of for the national payment scheme? Is the national payment scheme open to new small companies who want to take part in it? Do they have a chance of deciding its future, you know, not just being customers, but in actually participating in drawing the future of payments alongside banks? The purpose of my asking is that, is it only the banks who are in controlling the national payment scheme, or is it a wider circle of companies?
Oh, well, I don't think we're in any way regulating this, I think, very market-oriented area as fintech and innovation. What is happening in our market regarding the regulation? I think nowadays regulation just touches only the basic infrastructural level that should ensure independence, continuity of business, functionality, and you know, like networking of the banks. Plus, there is some sort of given to us as a national payment scheme, some of the types of the payments that should be driven by the national payment scheme only.
And why is that? Because those payments are very mission critical, right? They're essential to a country's commerce.
Exactly. So what the country, the government, and the legislators, what they did, they really put some rules how the basic infrastructural, basic level of the payments, electronic payments should work. When we start talking about innovation, about you know, this fintech sort of things, I think it's a much higher level of where you find it. It's more about, I think, interfacing between the person and the financial institution, between the some sort of services and the person. So fintechs are much more about the last mile of this communication. We're on the platform level, and I don't think we really, or even the banks, they really can prevent or trying to prevent somebody doing anything innovative in the market. And there is no specific legislation, neither in favor of fintechs or against them, in favor of the banks or against them. Not so far. I can only say that, for example, our central bank is trying also to drive innovation through the what we call Fintech Association. It's a just non-profit association that has been created by a big number of banks and the central bank in the lead. And now what we see, who is now the members of this Fintech Association, certainly central bank, certainly ourselves as a national platform, a lot of banks, a lot of insurance companies, a lot of fintech companies, a lot of, I don't know, electronic vault companies. So all the players in the market, so even some of the biggest merchants also see an importance to be there in the area of this innovation, in the area of the latest achievements in digital solutions for anything that is happening now in government services, in payments, in anything about identification or digital profile of a person. It's all now within the scope of the interest of this Fintech Association, and I can say that the members and the active participants are not the banks.
Okay, perfect.
Not only the banks.
Perfect, but as you said, and as Tariq said, that there has to be a mix of the different forces. So you've got to have the regulation, but you also have to hear the voices of other people who want to play in this sector. Arif, just quickly, a criticism that has been levied on the Indian government has been too much regulation, too much involvement. So if you don't mind my saying it, there have been people who, even The Economist has been saying that, for example, the demonetization was a disaster in India. But at the same time, slowly and slowly, Indian digital transactions are really spiking up, which may not be demonetization. So there is good and bad of the government involvement.
I mean, frankly, I personally feel the regulator and the government, both in the country, have been very calibrated in their approach. Of course, demonetization came as a surprise, but if you put that aside, the entire subsidy and the disbursement that the government does is now through electronic channels, reaching to the end customer directly. So that's one of the great things they have done. The other one is around 3 years back, and this is pre-demonetization, around three to 4 years back, what the government did is they actually went on a mission to make sure that every Indian family has a bank account. What they did by that, what they achieved by that was within a period of 1 year, we opened around 350 million accounts in a single year. So what it meant that every family was banked. And while demonetization happened, it actually allowed people when there was cash pulled out of the market and ATMs could not serve them anymore, at least for the first 2-3 weeks, a lot of people opted for these very nice apps which were there in the front end, which gave great customer experiences. So the entire adoption and catalyst to fintech actually started over there. So yes, one can say in the short run, demonetization probably he had some hiccups and challenges, but if you look at the long-term effect, even though after the peak, the volumes have settled down now, but now we have products like UPI, which we do around 800 million plus transactions every month. And it has P2P, it has P2M. Again, over here, the P2P part of it is free. So it allows individuals to come on board and there's no cost to them. It works as a Trojan. And very lot of Indians, people who are in professional services, people, drivers, tailors, they use these services. So while they're on the P2P platform, it's a merchant pay. So overall, if not, it's actually triggered mass adoption. What is also done with railroads like UPI, which have been very well calibrated, operationalized in a very structured, open way, it actually has enabled a four-party model. And I personally believe a four-party model allows for banks and fintechs to come together, right? Now there's a clear difference coming up between the keeper of the money and the gatekeeper. So there is democracy of funds, that's the way it is done. What it also allows is when you open up into a four-party model, there is innovation taking place on the edge. So whether you call them TechFin or FinTech, for example, Google Pay does huge volumes in the country, and these are micro transactions of sub $2.
Right.
So this all was initiated thanks to the government push, demonetizations, the account, what we call Jan Dhan Yojana, where we opened more than 300 million accounts, and the distribution of subsidy. These three have come together, and in the long run, I think that's what is doing well for us.
Perfect. I think we only got a few minutes left, but we have some key topics to cover. Ziad, in terms of the Saudi payment system, how it is helping, are you looking at all innovations in your national payment scheme, MADA? When you make innovations in technology, are you looking across all channels? It's not, because MADA used to be only the scheme at the point of sale, right? It wasn't on the internet.
Yes.
Now you've got internet as well as mobile, right?
True.
Yeah.
So the main key is diversifying the solutions, the channels, in order for many citizens adopting more digital use. We recently also announced the launch of the QR open loop, which will be the back-end infrastructure for the QR digital to offer their solutions which are interoperable.
So a bit like Alipay, what Alipay is doing.
It's similar, but it's an interoperable QR
Okay.
where all the digital QR providers will use the same QR, whoever is the acquirer,
Okay.
and the transaction is routed. And this is creating a cheap solution for the micro and the small shops as well.
Okay.
And you have already mentioned it. We've enabled the mobile payment through Apple Pay and through an application on Android, which is owned by Meta, which help and boost the usage of the cardholder more on the point of sale. Last month, for example, 40% out of our point of sale transactions are actually contactless. And we're growing in a very big volumes month after month.
Okay, perfect. That's great. Thank you. So just from what Ziad has said, that payments are now crossing all different channels. So it's not just a payment with a card at a point of sale. You got mobile, you got internet, and who knows, with Google stores in the US, facial recognition, right? You just go in. I mean, that's almost like shoplifting, right? You go into a shop and you come out, and You say, oh, sorry, yeah, you didn't have my face on file, you know, maybe shoplifting there. But my point here is, to what extent do you see mobile and other similar, so it could be mobile, it could be facial recognition, coming in, and in the future you might see the national payment scheme really, majority of it being virtual. You may not even see the physical card, but you will just see, you will still have the national payment scheme, but a lot of it happening without the physical card. Okay, go ahead, please.
Well, I'll say one thing, Sammy. For me, a national payment scheme is not just a card. We're talking about channels, instruments, schemes. This is a national payment scheme. It's not just a card. The card is one of the instruments that are used, okay? So, we have here in Egypt, we've got an automated clearing house. We have digital interbank scheme that gives a huge number of services available, like P2P, R2P, cash in, cash out, cardless ATM. So I think the future is simple for the national payment scheme, and this gives the edge, is that you could have a proper interoperability between all those channels, instruments, full interoperability. So it's going to be seamless for any payer and payee to have, as they say, a jolly journey, having the fun going from the payer to the payee, and it goes through any of those schemes. So you could have ACH connected to wallets, to e-com, connected to bank accounts, virtual cards even, or digitized and virtual cards available. This is the part that we're working on right now in the national scheme in Egypt, okay?
So, sorry, just to now we literally are running out of time, but I think that's a very important point you make, is that it's not just the payment scheme going from one form factor to another, like card to mobile.
Oh, exactly.
What you're saying is the national payment scheme's definition broadens to not just a card infrastructure, but also a bank payments infrastructure.
Exactly, definitely.
That's very interesting. Vladimir, last word on how do you see future technologies actually changing the way you look at national payment schemes? Will you see in future new technologies completely coming and taking over, let's say facial recognition and things like that?
Well, yes, definitely technologies will just now boost and keep on boosting for many years. And the faster they become, the faster the change is, the less we will understand what will happen tomorrow. But we definitely understand that it all goes about biometrics, and this biometrics starts to go from just telephone to an external system, which is a little bit scary, as you mentioned about Facebook. Oh, my face is somewhere, because just storing like master bases of cryptograms of faces or other biometrics is a challenge. I think it's a challenge for any system. But yes, in my understanding, the payment of the future is when you come to a store, to a shop, and you start, taking something from a fridge, and your smartwatch says, don't take this milk. You have 2 liters in your fridge already. Just take some I don't know, butter. You don't have butter anymore, and you just take butter and you go out, and you just don't see when payment happened. And this is the most important thing. The less frictionless, the less friction you have in terms of when you make a payment, the better is for the very product and for the service that is being offered to you at the moment.
As we see in the success of the likes of Uber, right? You don't even see what happened with the payment. It just takes place. Just last word, final comments from Arif and Ziad. Arif, obviously everybody knows that India is big on biometrics that Vladimir just mentioned. Is that the way forward for the national payment scheme for Rupa in India, always with the fingerprint?
Well, there is a debate going on within the Indian courts and the legal system as to what we call Aadhaar.
Because that can be risky as well, because if your fingerprint is compromised, then it's compromised forever, right?
True, but I believe the infrastructure is quite protected and it's really helped financial inclusion. So I think that debate continues. But another thing that has happened in parallel, which has gone unnoticed, is essentially all it means is we've actually separated the financial identity from the digital identity, and we've achieved that with UPI. So I think clearly the debate as we go ahead will be about digital identity of individuals, right? And especially for the people who are, the illiterate and the people who are not so, privileged in life. So that's going to be bad. Another good, the other point that, I would like to leave and would want every national payment scheme to consider, it's not spoken about very often, is the fact of using open source technology, right? Let me just try and give you an example. Before we stepped into the ATM switching into the country, roughly ATM transaction switching fee, while interchange we can debate whether market or controlled or regulated, it's the switching fee which the domestic scheme can really influence. And before we came into the scene, the transaction switching fee was roughly around 1.5 Egyptian pound, if I've got my conversion right. And now it's quarter of an Egyptian pound. And that's where your open source, ability to scale, be free from license really helps. So if I have to suggest something to people here running national schemes, is to really focus on what you can do with open source and how you can scale with that. Thank you.
Okay. And scalability is the last word. Scalability is a key thing in, as you say, in payments, the cost control is all about scalability, right? Because you don't have margins like you have in anything else. Is that also, just a last comment from you, for Mada, scalability is the key thing?
It is actually, and it's going back to the collaboration between the regulator, between the infrastructure enabler, between the other payments ecosystem to create first reliable systems, able to scale, creates a seamless experience for consumers, also create solutions and products that fit for purpose.
Yeah.
If I give an example, back in Saudi Arabia, we do have the Ministry of Labor. They've decided, in order to protect the wages, to transfer all the wages from cash to digital, which create more theft, which create more demand. And
so nobody can pay wages to workers now in cash, it's all on the card.
It's created actually 30% more card in circulation.
Perfect. I think we're running out of time. I have been a bad moderator because I was supposed to invite questions from the audience, but we got carried away. We could actually have another conversation for another 2 hours. But thank you so much for my guests. It's very interesting, and particularly the views that you have brought from your own markets. I think it has been brilliant. So please join me in giving a hand to our panelists here. Thank you.